After the last Federal Reserve meeting on September the 17th, traders got a clue about which data points now matter most for intraday opportunities. First up, let's look at upcoming inflation data points. Now, the Federal Reserve, as they told us, do not expect core CPI to hit target here, look, until 2028. That means that if inflation readings come in below market's minimum expectations in upcoming data releases, we'll likely see sharp dollar weakness. Easy plays would be euro dollar longs intraday or gold longs intraday. Next up, let's look at GDP. Now, the Federal Reserve now expects GDP to be a little firmer than they projected in June. Look at this, 1.8 versus 1.6 and 1.9 versus 1.8. So stronger than expected GDP prints should support the dollar because that can mean the Federal Reserve can take longer about cutting interest rates. If the US economy is strong and firm, that means they can stay a little higher in rates for a little longer, which should be dollar supportive. So if we see higher than expected GDP prints, that's euro dollar negative, since traders will infer the Fed can stay higher for longer to fight that inflation battle, which they've signaled by this core reading not hitting target until 2028. Finally, there's the labour market. The Fed flagged recent weakness in jobs data, which analysts and traders have been eyeing since that very weak non-farm payroll print increased expectations of Federal Reserve interest rate cuts. And one reason the dollar sold off ahead of the September meeting was due to weak labour data. But if labour data surprises now to the upside, say we get stronger ADP, higher non-farm payrolls than markets expected, upbeat in ISM employment sectors, lower jobless claims, all of that signals resilience in the labour market. So again, that should strengthen the dollar and give us short-term euro dollar downside opportunities. One last point is just remember that the medium-term bias for the euro dollar has a buy bias now. That's because you see the ECB, they sort of signaled the end of their interest rate cuts. The next interest rate change is expected to be on hold, and there's only 3% of a 25 basis point rate cut for the October the 30th meeting. And the Federal Reserve, by contrast, has signaled upcoming interest rate cuts, and markets are expecting an interest rate cut in the next meeting on October the 29th. So over the medium term, euro dollar has a buy bias. I've bought in to the euro dollar just on this pullback down to this sort of 730 region. You can see here breaking above major resistance, an obvious area to buy in. So keep in mind that the euro dollar has a medium term buy bias when looking for short term intraday setups of US data. If you would like help to know how to trade short term opportunities using US economic data points, do get in touch, as I have a number of different courses and ways that I can help traders improve their macro analysis.